What's going on, ladies and gents? Hope you are having a great day. Today's video, I'm going to be breaking down my Robinhood portfolio sector percentage. But if you are new to the channel, if you like stock market investing, financial freedom, and saving money, make sure to hit that subscribe button and the bell icon, and we're starting right now. Welcome back, Mike the Investor. Hope you are staying inspired and staying motivated. I'm going to be using the platform called tipranks.com. This is a free platform to use that you can literally sync your portfolio up to. It is very, very useful. I do have a 15% coupon code down in the description. It takes my portfolio that I have synced, which is currently my Robinhood portfolio, and it updates live. You have my overview of my daily return, my monthly gain, and then my total gain. Now, my total gain will be a little off, a little skewed, because I just started using TipRanks towards the end of July and I joined the stock market the end of April, so it won't have all of my data completely accurate when it comes to my gains. But as far as the other information, as far as my portfolio analyst that we will be clicking on next, it will have pretty much all of that completely accurate. So as we hit the my portfolio analyst, you will see it will break down the sector allocation percentage. The consumer goods, I have 7 in that sector. Financial, I have 5. Services, I have 4, which will be consumer services. Healthcare, I just have the 1 stock. Utilities, I have 2, and then other is technology. I'm not sure why it does other for the technology, but on another screen it actually identifies it as the technology sector, so I will show you that a little bit later. But one thing that's really cool that I like about TipRanks, that it gives you a full analysis on all of your stocks, your sectors, your weight distribution, and everything like that. So if you want to have a certain allocation and a sector, this can really help you stay on point. So even if I click over to my ETFs, it will break that down for me as well. So you can see I have 2 large value ETFs, 1 mid cap, and then 1 world small cap. So as we go back over to my stocks, my major holdings in the consumer goods will be Procter & Gamble, which is 8.46 of this sector. Altria is 6.08%. Archer Daniels and Midland is 5.44%. Coca-Cola is 3.78%. HP is 3.26%. So as we move down to financial sector, you will see I have my Bank of America, and then the other 4 stocks will be just my monthly paying stocks, which 3 of them are REITs: Apple Hospitality REIT, Realty Income, Stag Industrial, and then Main Street Capital is a business development company, also known as a BDC. So I think my financial companies that I hold, I think they are really strong. I think they're very stable in my personal opinion, and I'm gonna keep adding to them in the long haul as well. So we go down to the services. It would be PetMed Express, UPS, United Parcels, Starbucks, and ABM Industries Incorporated. We move down to healthcare. I just have 1 stock that's in the healthcare industry as of right now, which would be Pfizer. It is 12.68% just on that 1 stock, because I've been taking advantage of the dip that Pfizer has had over the past few weeks. So I've been adding more positions into Pfizer. Is the reason why I have so much allocation in Pfizer. But I am looking to add Johnson & Johnson as well, which I think is at a really nice buying point. So as we move down to utilities, it will be the AES Corporation and then Aqua America. And then we move down to the last sector in my portfolio, which it has other, but it is technically the technology sector, which is 6.46%. And then another cool thing about TipRanks is if you have any closed-end funds or ETFs or anything like that, it will give you your investment fees based off your expense ratios for each ETF or closed-end fund that you own. And if you're not 100% sure how ETFs expense ratios work, those are taken out of the assets yearly. Now, I'm not 100% sure why it doesn't have SPYD on here just yet, but this is another thing that's pretty cool. My portfolio volatility is a 0.72 beta risk, and that is very low. If you don't know what the beta risk is, literally you can just kind of look at this beta chart here and it can show you the average TipRank portfolio is right at the middle there. My portfolio is right here, so it is a very low risk portfolio, and that's kind of what I was going for. I do want to get my dividend dividend yield percentage up over my entire portfolio as well, without per se sacrificing the risk of my portfolio. So I will be looking to up that strategically as well. Another cool thing is if you see my most volatile stocks that are making my portfolio the most risky, which would be HP, Bank of America, and ABM. It gives you the beta points on them as well. And then my portfolio dividends, I have a 4.6 cents estimated portfolio dividend yield, which I think is pretty impressive on a $3,500 portfolio. So if I wasn't to add any more capital in my Robinhood portfolio, I will be getting $164 annually. So that is just the power of dividends and compounding interest right there, because it really gives you the ability to, once you have your portfolio set, you can kind of let it do its thing and your money will keep coming in and keep coming in. And that's what the whole snowball effect is about. And then we hit C, dividends. It would give you my top dividend holdings based off their dividend yield and my upcoming dividends. So my top dividend yield stocks that I hold would be, two of them are ETFs, 𝐻𝐷IV and 𝐷IV at 10.40% and 8.10%, and then 𝐈𝐍𝐿 at a 7.60%, which is an incredible dividend yield. And then you see my upcoming dividends I have would be HP, Leggett & Platt Inc., and Coca-Cola. And then it gives you your success rate, your average return, your 12-month return, and then your year-to-date returns. Now, the year-to-date and the 12-month return and my average return is not correct. And the reason why I say that is because when I started TipRanks and when I synced my portfolio, it was not the same time when I joined the stock market. So as you see, I was active since July 25th of 2019, and I joined the stock market April 24th. So there's a couple months that is missing, that it doesn't have the actual correct gains and losses for my portfolio. So that is probably the number one pain about the platform that I don't like. So if you're using a platform, it's going to show you your own portfolio gains and losses anyway. So it's not a big deal, but it would be nice to have that accurate. So as you see my allocation, now it's going to break down my top stocks that has the most percentage out of my whole portfolio. So you see Pfizer is at 12.60%, Procter & Gamble is at 8.48%, Bank of America 7.91%, AT&T 6.48%, Altria 6.09%, Apple Hospitality REITs 5.63%, and then it goes to all my other stocks. Makes up the rest of my portfolio would be 52.81%. And then we move over to sector allocation. As you know earlier, it didn't have the technology sector as I mentioned on the other screen. It had it for other, but on this screen it shows technology. So I'm not 100% sure why one screen it shows other and the other screen it shows technology, but I just wanted to show that to you so you know the full breakdown of my sector allocation. And then my assets allocation would be my equity, which would be just my stocks, is 82.02%, and then my ETFs that I hold, which are 4 of them, would be 17.98%. So my goal in the future for my asset allocation is to get my equities to about 25 and have a 75 to 25 ratio there. Thought about also doing 80 and 20. So I'm kind of juggling both of those ideas around, but I'm thinking I'm leaning more towards the 25 and 75 allocation breakdown. I think that would be a little bit more safer and gives your portfolio a little bit more stability as well. But that is my sector allocation percentage breakdown. I hope you all enjoyed this video, and if you are new to this channel, make sure to hit that subscribe button and the bell icon, and I will see you guys back in next time.